The American retail landscape isn't the same as it was just a few years ago. Brands that used to have thousands of stores across the U.S. are going out of business after struggling for years. Today, we've listed 15 big retailers that have announced mass store closings or are going out of business in 2024. Number 14, Family Dollar. Dollar Tree-owned Family Dollar is conducting one of the biggest mass closings in the country this year. More than 600 locations are set to close in the coming months, while 370 will be closed in the coming year as leases expire. The struggling discount chain, which caters to low-income customers, is facing waning profitability issues after years of mismanagement. Recently, the company was fined more than $40 million for a rat infestation at a warehouse that forced hundreds of stores to temporarily close. To make things worse, decades-high inflation has hit shoppers hard, and a general consumer pullback has impacted Family Dollar's bottom line, exacerbating its battle with discount competitors such as Dollar General, Walmart, and others. Number 13, Walgreens. Walgreens, the popular pharmacy chain, plans to close 450 locations throughout America. In the company's quarterly earnings report, CFO James Kehoe said that at least 150 of those closures will be in the United States as the company takes immediate actions to optimize profitability for its U.S. healthcare segment. Kehoe said the shutdowns are expected to save the company $4.1 billion by 2027. According to the executive, the move to reduce Walgreens' brick-and-mortar footprint is to accelerate the company's portfolio optimization to further simplify the business. About 500 roles will be cut as a result of these changes. Number 12, CVS Healthcare. One of America's biggest retail pharmacy chain, CVS Healthcare, is significantly reducing its store count as inflation puts a damper on its overall margins. The company is in the final year of its 3-year plan to shutter 900 locations. Executives say changing populations and buying patterns have led them to reconsider how many stores the chain needed in certain areas. In 2024, 300 stores are going dark. About 50 locations have already been closed, leading the company's stock to fall dramatically earlier this year. On top of that, a net loss of $421 million is making investors concerned about the financial strength of the chain, which is also reporting massive profit losses due to retail theft. Number 11, Walmart. Retail titan Walmart is closing stores in 4 states as financial results failed to impress for yet another year. Even though it didn't disclose the exact number of closings, the retailer said that the targeted locations did not meet financial performance expectations for 6 to 8 consecutive quarters. Last month, 6 stores were closed in Maryland alone, with 2 closed in Ohio and 5 shuttered in San Diego. More California stores are on the chopping block for Walmart, as well as locations in Arizona, New Mexico, and Texas. Number 10, Whole Foods Market. Amazon's grocery business is not performing well in 2024. Since 2021, several Whole Foods markets have been struggling to stay in business, with more than 71 outlet closings between April 2021 and August 2023. Now in 2024, the company is closing 9 more outlets. The stores closing this time are in New Mexico, Colorado, Utah, California, Georgia, Arizona, and Illinois. Number 9, Office Depot. Office Depot is one of the big names that's been losing to online retailers. It's simply cheaper to buy office supplies online rather than visiting physical stores. The company tried to merge with Staples, but the plan failed, and now Office Depot is closing 200 locations. Lower than expected sales and $1 billion in debt could aggravate the chain's problems this year. In addition to losing ground to online retailers, the company is struggling with the changing nature of work itself. There's less demand for traditional office supplies and furniture, as people work remotely or from home, which is making executives question Office Depot's business model and whether it is sustainable over the long run. Number 8, PetSmart. The largest pet retailer in the United States, PetSmart, is having a hard time paying down its debt as well as making a notable profit. According to Retail Dive, growing competition may force the company to file for bankruptcy soon. A few years ago, PetSmart bought e-commerce competitor Chewy, but that just weakened its financial position. For that reason, the company is cutting costs where it can, which includes the closure of 48 underperforming locations in the coming months. Number 7, Target. Target stores are going out of business as the company faces its deepest crisis ever. The Minnesota-based chain announced that it would close 9 locations due to theft and inventory losses. In their press release, they said, "We cannot continue operating these stores because theft and organized retail crime are threatening the safety of our team and guests and contributing to unsustainable business performance. We know that our stores serve an important role in their communities, but we can only be successful if the working and shopping environment is safe for all." The retail giant stated that it doubled down on security to prevent this from happening, but also noted that the financial losses were simply too big to keep these locations open. Number 6. Macy's. Just a couple of months ago, Macy's revealed plans to shutter 150 underperforming U.S. stores over the next 3 years, including 50 locations this year. The department store chain said it's running a full rebrand that is starting with cost-cutting measures that will allow the company to upgrade its remaining 350 stores over the long term. Macy's stock price has dropped 75% from a peak of $73 a share in 2015. Since then, it has closed nearly 300 stores, almost one-third of its locations. Number 5. GNC. In 2020, GNC announced plans to close 1,200 stores over a 5-year span, mostly due to the fact that the company has not been profitable in a while. Though the closings only began late in 2021, they've picked up pace in the following years, and according to a company spokesperson, about 192 corporate-owned and franchise stores will be gone for good by the end of 2024. Consumers argue that it is just more convenient to purchase their supplements and nutritional powders elsewhere, not to mention cheaper in many instances. That's why retail experts believe the chain could disappear within the next 3 to 5 years. Number 4. Claire's. Teen retail brand Claire's filed for bankruptcy protection in 2018 as it tried to find a new buyer and restructure its debt. Unfortunately, since then, sales have sharply declined, putting the company at risk of going out of business completely. Now that U.S. malls are closing at an alarming rate, more than 100 Claire's stores are scheduled to close by the end of 2024. Over the past 5 years, more than 1,600 locations have been shuttered. Number 3. Sears. Sears used to be a giant in the department store world. It was the go-to place for everything from clothing to appliances, furniture, and more. In fact, its parent company, Sears Roebuck & Company, was once the world's largest retailer, operating nearly 3,500 stores, including Sears and Kmart. In 2018, the retailer filed for bankruptcy, which led its store count to shrink from 700 brick-and-mortar locations to less than 22. Today, only 12 Sears stores remain open. Number 2. American Eagle. American Eagle CFO Michael Mathias has told investors that the apparel retailer is looking to close 200 to 250 locations during the next 2 to 3 years. He also said that as many as 225 stores would be closed by early 2025. Today, there are 880 American Eagle locations around the U.S., but the company said it ultimately wants to bring that count to about 400 before 2030 as it expands its online business. Number 1. Foot Locker. Foot Locker has announced plans to close over 400 low-performing stores and shopping malls by 2026. The footwear and apparel retailer announced the closures, stating that about 66 of the remaining locations would either be relocated or remodeled. Overall, Foot Locker expects to close 25% of its locations in A and B-rated malls and 50% of its stores in C and D-rated malls, where sales per square foot are lower. Take a listen to what Michael Bordenaro has got to say on these store closings.
Now, one thing I find interesting about this scenario with this current economy is how literally you cannot wake up every day and not see a story about how well the economy is doing. Meanwhile, there's so many different things that contradict that. Like, for example, we are seeing fast food stores and retail stores closing by the hundreds right now. And my simpleton thought is, well, if the economy is doing well, then stores should be opening, not closing, right? I mean, that's pretty simple to think. In fact, Walmart just announced more store closures for 2024. And Walmart is not alone, guys, okay? Macy's, they're going to be closing 150 stores this year. Kohl's, instead of closing stores, they're trying to have other stores within Kohl's to help pay the bills because things aren't going too good for them. And you have Dollar Tree and Family Dollar announcing that they're going to be closing 1,000 stores this year in 2024. That is massive, guys. To have 1,000 stores just evaporate in 1 year just like that is kind of insane. And the dollar store is a cheap place, right? That's where people go to get the absolute bottom of the barrel, cheapest goods available, straight from China, straight from wherever. The cheapest, worst for you food that you can think of is available for sale at these stores, and those are closing right now. And can you take a guess why all these businesses aren't doing so good? Take one guess. It's called theft. That's right, people are stealing, guys. They call it shrink in the retail business, but you can call it for what it is, and it's theft. People are stealing, and these companies are losing so much money that they have no choice but to close down these locations. It's really that simple. Then you throw in a bunch of high prices into the mix like we have right now, it's a recipe for disaster. And I just have to ask everybody out there watching, is this a sign of a strong economy that we're closing down thousands of retail stores this year? I mean, I don't get it, guys. I really don't see the argument, because we should be opening thousands of stores if this was a strong economy, but instead, there's more stores closing than opening. I mean, Walmart, they're basically the largest retailer in the world, okay? They closed about 24 stores in 2023 already, and now they're announcing more store closures due to the same reasons. Lower than expected performance, inventory shrink, and economic downturn is actually a term that Walmart is using to say why they're closing stores, guys. So basically saying we're seeing more people stealing and the economy's taking a turn for the worse.